Welcome into a brand new episode of WSI TV. Enjoy the show.
Another episode of WSI TV. I'm joined today by Jim Sampson. Hi, Jim.
Thank you. Hello.
How are you doing today?
Good. How are you?
I'm great. So today we're going to be talking about the general market update. Before we do that, I want to remind you guys, as always, to log on to WSITV.com to sign up for our free newsletters and access for free to WSI TV Vault. All right, so today we're talking about the S&P 500, which has hit kind of a record new high today.
Right. Yes. As we speak.
Yeah, so do you want to tell us a little bit about this and what it means?
Yeah, so every week we look at the big picture, and the big picture has been bullish since we called it on September the 9th. That's my proprietary system that has announced a new bull market. Had us in cash for a while, actually, since October of last year, while the market waited for it to sort itself out. The last time it's called it correctly, from November 16, for about 2-year run, it gave us a 44% gain if you're double leveraging it up. So what's going on now then? Yes, it's September the 9th. We've had some ups and downs, but maintained our stance. And the one thing we're waiting for actually was that breaking out to that new high and really accelerating things nicely. Now, you can see the aggressive upwards push on the moving averages, but not just the price. And, as usual, the system was early to the table in calling it.
Yeah, so right now we're resting. The high we've reached today is 3,040.
Yeah, hovering around that all-time high mark.
Yeah.
So it'll be interesting to see, how the market reacts to it. But all in all, the bullish picture is intact.
Absolutely. And our previous high was 3,025. So this is quite a big jump outside of that.
Yeah, and it didn't just edge up today. It surged up. So that in itself is a bullish sign.
Absolutely. So what does this mean for the future of the stock market? Whenever we reach a new high, it's always this big moment of kind of a sigh of relief, but also a question of what it means moving forward.
Yeah. I mean, you always get the people who are what I call the Perma-Bears, and they're never anything but bearish. And so there's always people who'll be saying, who are taking the contrary view of, the market's getting high. It may well be, but there's nothing more bullish than a brand new high, especially from what was already a bullish situation. So, this really is looking more and more now. This is an aggressive looking beginning. Anything can happen. We don't class ourselves as fortune tellers. We're really just studying the market, letting us see what it's doing. But the picture I see right now looks like the start of a brand new bull move. However unfounded it may or may not be, it is what it is.
Yeah, and it definitely looks strong from the market. So if we look at our indicators, it's there. And then we've also moved into the fourth quarter. We're about halfway into the first month of that. And this is the kickoff of buying season, which usually means that retail shopping increases. The consumer is out there surging the market more. So we've seen a lot of quarter 3 earnings reports happen in the past few weeks, and everything has beat the expectations.
Yes.
So you want to tell us a little bit about what that means?
Yeah, so this is a game that Wall Street plays constantly, and the idea, they'll set out an earnings estimate for next quarter, and then they'll come in with the actual earnings. And of course, everybody wants the good news of, we beat earnings expectation. But the game they're really playing there is they're playing down their forecast a little bit, because their brokers are telling them, you've got to beat, and that's what the market loves. Usually when things are happening normally, when the news is good, when a stock beats its forecast, that usually sends the price up. And that's what you're seeing reflected in the market right now, which is something that one of our services capitalizes on, actually. The Wall Street Bounty Hunter, I believe, that one. So this is going well for that. But yeah, it is a game that Wall Street plays. It sort of distracts people from the actual valuation.
Absolutely. And it's really interesting to see these companies putting out these expected earnings increases on stocks. So AT&T beat earnings expectations with 5% earnings for the last quarter. And they've put out this goal to reach 33% earning increases by 2020.
Right, that's ambitious.
Yeah.
But there is a deal come through, I believe, with streaming. There's a streaming deal.
Yes.
So that, as long as there's underneath the surface of it, a fundamental shifting, and that these days, in disruptive technologies, that can happen. If they secure a big deal, let's say, with Netflix or F8 for streaming and stuff like that, that can dramatically affect.
Absolutely.
So as long as there's something underneath that,
forward.
yeah. But the chart of AT&T has been flying for months now.
Yeah.
And that's just almost confirming the move. Not necessarily adding to new moves ahead, but it's certainly looking like an extremely bullish chart right now for sure.
It's just a really interesting increase, especially with that streaming service. We've talked a lot about the streaming wars that have been going on.
Yes,
and this is a continuation of that.
Yeah.
And AT&T already has kind of a stronghold as one of the biggest providers for phone services.
Yeah.
So they're really trying to reach into that niche market.
And we saw that recently with Disney, I think, where Disney was when Netflix was having a
absolutely
battle. So it's
still going on, but
so streaming wars is the big news. That's the true news, not trade wars actually.
I don't have our jar, but
another
coin in the jar.
Okay.
So our overall economic output hit a 3-month high this month. And along with that, we've seen the manufacturing industry kind of pull back from the lows that it was reaching. So it looks like everything's kind of smoothing out, getting back on track as we head into quarter 4. Do you think that we can expect this to continue on?
Yeah, I mean, there's no reason to see why not. The stock market's certainly pointing to it. As you touched on, Black Friday this year is going to be a big one. Retail is not exactly kind of neutral. If you're looking at retail, it's not bullish, it's not bearish, and that's Main Street. So that'll be an important one to watch. But yeah, I mean, it's there's nothing like when it comes to forecasting the actual market. Telling us, but there can be this disconnect between Wall Street and Main Street, so that that's why we keep an eye on things as well.
Yeah, people have actually been pretty concerned about that disconnect because we've seen such a surge in the economy, and until recently we haven't seen that echoed in the market. We're starting to see it now with this new
and you're seeing a very high employment. Unemployment is at all-time low again. But that again, you've got to take that into context because being employed doesn't necessarily mean you're going to spend a lot of money. You could just be living on the poverty line. And that, I know that's something with younger generations who are typically should be the bigger spenders. Their salary levels. I know that's something you've looked at is something that's kind of stagnating.
Yes.
Whereas the bigger spenders, people who supposedly got more affluent income, baby boomers, getting to retirement age, getting more frugal. In theory, and a lot of them haven't put enough away for retirement. So there are a lot of factors in play but ultimately the stock market will just do its own thing in the short term. In the long term, it'll weigh things up like that.
Yeah, absolutely. And that has been a big concern with this increasing gap in who's earning and who's in the workforce.
Right.
And with millennials, we're seeing a lot more frugalness with their spending. We're seeing a lot more jumping from job to job. Less of that slow movement through a single job to the higher positions. So there's been a lot less spending there.
And the baby boomers are working longer, so that's not creating those upper level vacancies. Either the retirement age seems to get pushed back and back. And I think that's just really a baby boomer kind of mindset thing. Retirement's almost like a dirty word for them. They want to just stay in the workforce. They don't want to be taken off to the retirement home. So that's obviously complicated, and there's a lot of them.
Yes.
So that's another additional factor.
Yeah, and there's this increasing fear of lifespans are increasing, so retirement ages or timelines are increasing, and that means that you need more funds to retire, so people are working longer.
Right.
It's just kind of this ongoing catch-22.
Which is that's what we're doing all day here is providing income streams and investment methods that are going to overcome the. Even the things that Wall Street is quoting, 5% a year, I think that's going to be optimistic, looking decade or two out. I think we're borrowing a lot of tomorrow today. Absolutely. And that's what you're seeing, I think, ultimately, in the stock market.
Yeah, so do you think that eventually we're going to have to pull back and we're going to have to see that drop?
Yeah, I mean, we're certainly overdue, and this is one thing that I talked about the Perma-Bears earlier. They're always bearish, they're always looking for a reason to be bearish. Whereas we're not bearish or bullish. We're just wherever the market is. We have to shift accordingly. But yeah, in the future, I think we haven't had a recession for a long time, and the Perma-Bears love quoting that one. They love saying, "Oh, we haven't had a recession for X, Y, Z years, so therefore we must be having one right now." That's obviously not. Market doesn't think so yet, but there's always going to be bull and bear cycles. This has really been one long bull market, I think, since 2009. That's had a couple of interruptions. So the bear sort of paused for a bit. It's really all that happened. So it's been a very long run, driven by loose monetary policy. But of course, we have to have a bear market in our future. The important thing is not to get worried about that, but to make sure that you act quickly and accordingly as early as possible. And that's why you need to stay tuned to us. I mean, the case in point, we would have, before the big crash of 2008. December 2007, our system warned to go to cash, and that would have obviously saved a huge amount of problems. And that's why you need to stay tuned, not just for the big bull run that we just announced, but make sure that it's a game of shoots and ladders, and we need to make sure that you don't encounter any shoots.
Yeah, absolutely. We're going to get you out even on those lulls in the bull market.
Yes.
Our system will tell us.
Well, I mean, the system had us in cash for almost a year.
Yeah.
Because nothing was going on. And there's nothing wrong with being in cash. In 2008, cash beat the market by 100%.
Absolutely, and you can see that in our chart where there was that dip. So we got out just in time, and we got back in just in time.
Yeah.
So again, that's why you have to tune in.
Yeah. So it saves a lot of pain. And if you're down 50%, whether it's a stock trade or your portfolio, to get back to, if you think about it, to get back to even, you have to make 100% just to get back to even. If you get like it was in 2008, you lose 50%, which is obviously a shocking. We talk about numbers and stocks, but at the end of the day, there's real people out there, real families, real lives, and it's an oath we've taken to stop as many people as possible from encountering that over again.
Absolutely. All right. Well, thank you so much for joining me this week. It was great having you. Thank you guys for joining us for this episode, and we'll see you again next week.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.